I've loved the diversity of the advisory side. You literally learn something every day. Nothing's the same.
Can we talk about female representation in capital markets? Because it's woeful, right?
Yeah, I'd say it's a very difficult topic to talk about, actually. It is. I can't quite. I have my own, obviously have my own view, but it is really disappointing how slow change is happening within the advisory side. I was very fortunate in my career. I had those amazing male leaders who thankfully saw something in me that they wanted to nurture and encourage, and we need more of that.
Welcome to the People Property Place podcast. Today we are joined by Penny Hacking, Principal and Managing Director of European Capital Markets at Avison Young, where she also serves as a member of the European Executive Team. Penny has over 25 years experience in EMEA Capital Markets, having transacted in excess of 3 billion euros in all the major markets in Europe, including the UK, Germany, France, Netherlands, Spain, Nordics and CEE. She has experience across all sectors, but has a predominant focus on industrial, logistics and offices. She's worked with clients such as Tristan Capital Partners, UBS, CBRE GI, Prologis, Randall and WP Carey, adding value to investors and owner-occupiers on disposals, acquisitions, joint ventures, forward funding, and forward commit deals. Penny has worked at King Sturge, JLL, Victorios and GVA during her career, and is at the forefront of delivering change and driving diversity, equity, and inclusion across our industry. And Penny, I'm really, really excited to have you on the show. So thank you so much for joining me.
Thank you so much for having me. What an intro.
Well, look, I'm a little bit nervous about this conversation. So I think we're going to probably touch on a few things that I might be a little bit uncomfortable diving into.
Yeah.
But I'm really excited to kind of unpick how and why you've navigated your career.
Yeah.
Because you are certainly shamefully an outlier in our industry.
Yeah.
And as I touched on in the intro, I know you're passionate about diversity, equity, and inclusion and sending the elevator down to make it easier for people on the up. So I'm keen to spend some time there. But a place that I always like to start these conversations is how and why did you get into real estate?
So I come from a farming background. So yields have been a word in my life for a long time. So, and I was quite a tomboy and I loved working with my dad on the farm. And in his view, I should have gone, he wanted me to go down the land management route, which was natural route.
Yeah.
And so had a place at the Royal Agricultural College to study land management. I also had a place at Southbank University, Newcastle, Oxford Brookes to do commercial real estate. And at the time I was actually not quite professionally, but I was doing 3-day eventing very seriously, trying to get into a British team, training for that. And so it was also a cost thing for my parents in how we could do that at the same time. But actually what really swayed it, and I'll never forget, and I'm eternally grateful to this advice. I went for a final interview at the Royal Agricultural College, and the head of land management at the time was he was leaving, so I think he could probably be a bit more open about his advice. And he said, "So where else have you got places?" And so I listed them. He said, "I recommend you choose one of those. I don't think there's a long-term career in, or the future of land management is becoming narrower and narrower."
Yeah.
So I was quite shocked by that, but actually really good advice. And I told my parents this, who were quite surprised, and actually rang the person who said, no, I did say that. And in the end, I chose Southbank because it was close to home, could do both the sport and study, and it worked out brilliantly. And my degree included actually a sandwich year. So we had to apply for jobs, and I was very fortunate at the time to get a placement with a pension fund called NPI. And they were on Gracechurch Street. So I had a year with them and learned so much. I was involved in sales and acquisitions, asset management, valuation. And it was an amazing sort of door opener to really understanding real estate and from a client side and what investors were looking for, but also the life cycle I was involved. I mean, a short period of time, but I was involved, a small team, and a lot for that year. And I went back in my final year and thought, this is brilliant, and really enjoyed my last year. But it was a difficult time as well when I came out, similar to some people coming out from their degrees at the moment. I do feel for the young coming through and seeking positions. I was in that position, and there was a general milk round, but we had Jones Lang Rutten, St Quintin, Hillier Baker, Hillier Park. I am showing my age now. DTZ, and they cut back a lot on graduate intake. But I remember sitting in Hanover Square with my sister and saying, I want to work at Jones Lang Rutten. They are the best. I am going to work there. And I didn't get on the graduate scheme, but a role in West End leasing came up for a data analyst. So I applied for it. And that's how I started at Jones Lang Rutten. And I negotiated when I took on the role that I would also be put on the graduate scheme. And so that's how I started my career and got into Jones Lang Rutten. So a back route, really.
So growing up, what kind of kid were you? You touched on tomboy, farming, eventing, competitive.
Yeah.
Were you particularly academic at school? Like what, if you were trying to profile yourself, what kind of...
I mean, I was, believe it or not, I was very shy when I was younger, and I used to throw myself into sport, and working as well. So, yeah. And so actually, bizarrely, ending up in capital markets where you can't really be shy. You have to be quite a personality. It just shows that you can grow into that person and go for what you want to do. It takes a lot of people to help you get there. A lot. I've had the most unbelievable help along the way and support and leadership. So, but yeah, I was competitive. I think that's the main thing. And
clearly worked hard, right? As well.
Worked hard.
In terms of a farming background, right? Probably up early, working late, doing what needs to be done.
Yeah, definitely. And I think also taking the opportunity. The best thing about sport, any sport, I think, or anything which keeps you grounded, because if you're involved in horse riding or anything to do with horses, you have proper highs and lows. You're like winning, and then you're on the ground in front of everyone. So your pride is completely dented. So it's a brilliant leveler. Yeah, exactly. So, and you learn to enjoy the big moments. And I think that's transferred into my career as well. So you have to pick, not everything goes right. We know that. So you just need to pick yourself up, dust yourself down and move on.
Ride it out, catch the next one.
Yeah.
So you didn't get onto the Jones Lang Rutten graduate scheme.
No.
You managed to get in kind of through the back route via data route. Why do you think you didn't get on that scheme?
I think because I wasn't at Reading to start off with. A lot of the intake. Reading University was the prime source of graduates for all the big firms. But bizarrely, Southbank is where everyone now does their postgraduate degree. So I think and also there was, as I said, I came out and we were just coming out of a major recession in the mid-90s as well. And so there wasn't huge intake for graduates. They were just beginning to pick up. So I just didn't get on, really. Just unfortunate, but that didn't stop me.
Yeah, you managed to line another role up.
Yeah.
And have you always taken a long-term view? You thought, look, if I can get into the business, I can then start networking, or I can start meeting some other people, and
definitely.
I can put myself in prime position to get that seat.
And I'm always one to try and get the best if you can. Go for it. If you can't, then there are other routes, but always give yourself the opportunity to have the best. And I think, Jones Lang Wood, and it still is, a brilliant business. But it really trains graduates well, because you have so much opportunity there. There's so much diversity across the service lines, etc., that you can learn so much, and that's what I really wanted. And yeah, that's why I'm so determined to get there.
So how long were you a data analyst for, or data?
So I was a data analyst for about 18 months, 12 to 18 months. But in the meantime, I was working with assisting landlord and tenant department, because they're obviously looking at rent reviews, and you have to provide evidence, help them with the evidence. And an amazing person called Tony Hartley said, well, you should come and work for me. And I thought, actually, I think that's a good opportunity. Just diversify again, learn. And at the time, it's very different to now. But the rent review clause in a lease was where the value was for a lot of investments, because it's in 5 years' time, you're expecting rental growth and
upward only rental reviews.
Upward only rental reviews. But the wording in those clauses was critical. Fit or fitted out. That determined whether it was 3 or 6 months rent-free to get back to your net effect. Really small wording changed a lot of the value within that lease. So it was a natural step, actually. So learned about the West End office market, occupiers' requirements, helping dispose of or advise occupiers new space, and then going into landlord and tenant and either acting for the occupier or the landlord on their rent review negotiation. Another thing, learn more how to negotiate, because a lot of the time, your client didn't really want to go to arbitration. It's an expensive process, a long process, or to have an independent expert. So they're always keen to reach an agreement on a rent review.
Yeah.
And so you learn your negotiation skills in that environment.
And so you rotated, and you became more formally on the rotational program, did you?
Well, I didn't know, actually, because I'd done a year already. I could then say, well, I needed the areas which I needed to get further experience. So I went into the asset management side as well for a few months, but then went back to landlord and tenant, and then I moved across into the city, actually, because another amazing person called Richard Main, who had the brain of a lawyer, better than a lot of lawyers. He's unbelievable attention to detail, knew the law inside and out. And Sir John Riblatt he was the only one who advised him on Broadgate rent reviews, and lease renewals. He was brilliant. And so I had that opportunity to sit and work with him, which was amazing. So again, attention to detail, negotiations, how, and also understanding, learning about buildings, what has an effect on value again, all the physical elements of the building, which can, we all know has an effect on valuation, basically.
If you cast your mind back, how, out of your kind of cohort, I appreciate you kind of backdoored it, what was the kind of the gender split at that time, male, female, and how many people would be on that?
It was still low. There was a few females, but not that many. I was extremely fortunate. So my first day, I sat behind Anne Kavanagh. She amazing, leading light for all of us in the real estate sector. And then so the associate in my West End leasing team was Madeleine Cosgrave. So I had these two amazing people amazing ladies supporting me, and always there to help give advice and say, when I said I want to move to landlord tenant, Mads was like, yes, go and get experience. You need to broaden your experience, basically. And again, says it's a really important part of capital markets, understanding value. Yeah, for your clients. So did that. And then when I moved to the city, I then did a stint in city investment because I did want to move into capital markets. And also, I was young. Being part of a big corporate, we're a global corporate as well, I thought, I want to go and work abroad. And so I had the opportunity. I applied first for a job in New Zealand, of all places. Oh, wow. That came up. And it was between me and a guy. And I didn't get it. The guy got it. And I get it because at the time I did get it as well. But then...
What was the reasons?
I was basically didn't want a single girl to go over.
Fine.
He was happy with a single boy, not a single girl.
Yeah,
so,
fine.
And
it is what it is.
Exactly.
Yeah, fine.
And actually it was more beneficial because then this position came up in Brussels, and it was the Belgium team was run by an English guy called David Randall, who's now a Grand Fromage at La Française out in Paris. And they were seeking an English speaker to basically advise non-domestic investors, assist him into Belgium and Luxembourg markets. So I went over there and also worked. So David actually left and moved to Paris and ran the French capital markets team. And I was then Tony Smedley, who is now head of Europe at Heitman, was my boss in Brussels. And amazing experience, amazing, but very different culturally. I think that was the biggest shock for me, was how to learn to network with your new colleagues. They didn't go out for a beer after work. When I'll never forget, after a month there was another lady there called Sue Pictor, and she was helping on the occupier services side. She said, we need to go out for a glass of wine. And so we asked our colleagues, and they said, well, it's not what we do. We go home, we buy a nice bottle of wine, we go home, we drink it with our family. We're like, oh, okay, so completely different. But you worked with them, you live, and you grew great relationships with them because it's you had to learn how to
adapt and buy into their culture and do business. Had you qualified at this stage?
Sorry, I had. Yes,
you had qualified,
yes.
And then you were sent to Brussels to go and do capital markets and deals. Had you always wanted to do capital markets, and why?
Yeah.
And if so, why had you always wanted to do it?
I think it's naturally everyone thinks that's where the excitement is, and that's where the big news is always about in the press. And I think also you have to learn everything about real estate when you do a transaction. There's so many elements that have to be brought together to on an investment, whether you're advising a buyer or seller. And I think that, when I look back on my career, and I did leasing, I did asset management, I did landlord and tenant, it all assisted in me going into capital markets and being able to advise investors on buying and selling, basically.
How long were you in Brussels? Because you were there for a bit, and then you came back, right, to London.
So I was in Brussels for 4 years, and an amazing. I was only actually meant to be there for 2 years, and I kept, nobody said anything, so I just stayed there, and learned so much, because also learned other markets, worked very closely cross-border. So we worked with our French capital markets, Dutch capital markets, as I said, Luxembourg. because a lot of our clients were obviously cross-border, so the German funds, MEAG, DECA, Union. But at the time, we were also advising a lot of Irish were investing in Europe at the time, and Blackstone and other big PE as well. So great spread of investors there. And I think that's really where I learned my trade big time. It was tough. Don't get me wrong. It wasn't easy being a English girl in a foreign country, learning a new language. As I said, different culture, different, structures, everything. So stamp duty in Belgium is 12.5%. So a majority of transactions are through buying the shares of the holding company. So I'd never done that before. I had to learn that. I learned about a balance sheet. I learned about book values. I learned about CGT, all that.
Essential information.
Yeah.
Because you don't want to leave that off your appraisal and
No.
get hammered at the end, right?
Exactly. And so you had to advise about that side, not just the real estate as well. Compared to here, obviously it's more direct investment.
So what was the kind of the catalyst, and why did you move back to London? Can you just talk to me about how and what role you moved into? So
unfortunately, personally, my father was terminally ill, and I needed to get back to the UK. It was difficult because actually my boss had left in Brussels, and so they were not very keen for me to move back to the UK. They needed me there, really. But so didn't know what to do. And I spoke to a friend who was working at a firm called King Sturge. And he said, you should speak to James Beckham, who runs our city investment team. He's looking for somebody. And so met up with him, and he then offered me a job, which was brilliant and very, from his perspective, quite risky because I was coming back. I was quite open. My father was terminally ill. But he was rewarded. I came back. It was perfect timing for German closed-end funds actually coming into the London market. And so advised on some big transactions in the city.
So it worked well from your relationships that you built up in Brussels. You could always bring them and advise them, and there was almost that continuation in terms of relationship.
Yeah. So again, I was advising cross-border investment into the city market. So very much the German closed-ended funds at the time. They were the big buyers.
And so how did your kind of role evolve, or did you just stay with a kind of a city focus during your time there?
And no, so basically what happened, the market got too hot for a lot of the cross-border investors. They couldn't pay the prices with hedging costs, debt costs, yields coming in. So I then started doing a lot more across Europe and helping the teams across Europe because the yields hadn't moved in quite so quickly. And I was then asked to run the pan-European team. And so moved across from the city to the West End, and I had a team of about 6 of us. But we literally were helping our teams on the ground with advising clients on either sourcing sales mandates, pitching, buy side, anything that we could assist the specialists on the ground, really.
Yeah.
So going a more client-driven role, client management role, than actually properly direct.
Sourcing the deals and pitching the deals.
Yeah.
It was
Didn't stop me doing that, but that was the main driver.
And so your role evolved during that period from being very heavy in terms of doing deals and pitching deals to being still doing that, but kind of managing clients and more strategic relationships and getting to know what their requirements were and then allocating it across the UK or Europe to the relevant associate or partner to be able to execute or help them.
But still pretty involved in those transactions because the client actually likes you being involved. You have the relationship with the client, so they're still going to be asking for your advice on it.
Yeah.
And that's why I've been very fortunate about where I have transacted across Europe because my clients have taken me there as well.
you kind of moved to Jones Lang after nearly 6 years, right? How did that come about?
So
because you were Jones Lang Wootton, King Sturge, equity partner,
boomerang back,
and then Jones Lang LaSalle.
So King Sturge were acquired by Jones Lang LaSalle, and it's very important to remain friends within this business. And so we joined a lot of my old colleagues, and but I moved into the European Capital Markets team, and my focus was I led the European logistics capital markets across. So again, very much client focused, but working with the specialists across the European markets. And then I went away with had my second child and came back and decided that I would also take on some more roles and assist on growing the buy side business at the time. And that I was also country focused, so I focused on Belgium and Luxembourg to drive those markets for Jones Lang.
So again, someone listening to this, can you just explain the difference between buy side and sell side?
Yeah, absolutely. So on the sell side, you are mandated to advise an owner on bringing the asset to market, what price it should be brought to the market at, who the investors it will be suitable to, and what happens is it's a process. So you start marketing, you probably market for about 4 to 6 weeks, depending on what asset it is or it might be a portfolio, but 10 to 4 to 6 weeks process, by which time you would allow potential purchasers to carry out some initial due diligence, might be looking at the lease, some technical due diligence, things like that. And then you would be asking for them to come forward and make an offer, an initial letter of interest, basically detailing pricing. Do they require debt, which is quite significant, or all equity? What is the source of their equity? Timelines, how much additional due diligence, who their other advisors are, things like that. And then you would advise your client who the best purchaser is for that asset. And then you would give them exclusivity. And that would be, again, a certain amount of time where they then carry out a full due diligence. And that's where the money comes in. So it costs a lot of money for anyone to go through that process. But it's always about deal certainty on a sales mandate. And then hopefully it comes to a successful conclusion. Buy side, you're actually advising a potential buyer on that asset which has been brought to market. You're saying, this is the price you should be achieving. These are the timelines you should probably be expecting to have in go through the acquisition process. These are the best advisors to be part of the team. And then actually usually drafting the offer letter to make sure you meet the criteria which the vendor, the selling agent is expecting. It's a lot of communication with the selling agent as well, on expectations from the clients, and seeing if you can get a little bit of lead out of them on the pricing, and then obviously making an offer and hoping that you're the successful one.
And so on the sell side, you're retained to sell that.
Correct. Yeah.
On the buy side, you're not retained.
No.
But if you are successful, you will get a fee.
Correct.
For managing that transaction.
Exactly.
And do you work across both buy side and sell side?
Very much so. Very much.
And do you have a preference for one or the other?
Question. Well, sell side security of a fee. Yeah. Obviously, that's what a lot of us want, is a secure transaction as well. So you do get paid. Buy side is difficult. It's really difficult, but you do get rewarded. So usually, if you do buy an opportunity for an investor, you then might win the alternative services attached to that asset as well. It might be property management, the leasing. You might be part of the due diligence, assisting on the due diligence, such as the technical due diligence, environmental surveys, etc. So there's quite a lot you can assist that client with. And then if you do keep the property management or help advise that client on the holding of that asset going forward, you hopefully then win the sales mandate as well. So
see the whole life cycle a few years later once they've
exactly
kind of introduced their business plan and then want to kind of exit that.
Exactly.
So you, regional director, European Capital Markets, responsible for the region.
Yeah.
Did you ever think about wanting to move client side or moving to the other side of the table, or was it a case
quite often?
or was it a case of, I've done however many years I've done doing this, I absolutely love it and I'm good at it, and I like the people that I'm working with. Was there ever a part of you that wanted to jump over to the side of the fence?
Very much so. I mean, it's a huge frustration for us on the advisory side that if we do a fantastic deal and we are literally just the beginning of that deal, we don't enjoy the rest of it and the upside. I mean, don't get me wrong, there's obviously lots of downside sometimes as well, but that's often been my frustration, without a doubt. And I think one day that will change, and I'd like to go client side and have that opportunity. But most of my career, I've loved the diversity of the advisory side. You literally learn something every day. Nothing's the same. A new asset will come in front of you, or there's a new client wanting some help, or a business looking at a sale and leaseback. There's so many different aspects on the advisory side. I think that's probably what keeps us entertained, should I say.
Keeps you sharp, staying up and keeping up with the market. Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People Property Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. So you, in 2015, left Jones Lang LaSalle and you moved to Victorios?
Yeah, Victorios.
Victorios. How and why did that come about?
I was tied in. I was very fortunate to be an equity partner. So I was made an equity partner at King Sturge, one of the first and youngest females to be made an equity partner, which is probably one of my biggest sort of awards for myself, should I say, to reach that goal, because it's not easy. And so, but I was tied in from the sale to Jones Lang LaSalle. So I had to stay there for 5 years. And two colleagues of mine who I'd worked with at King Sturge and Jones Lang had set up a business called Victorios, which they said, would you like to come and join us? A net lease pan-European advisory business. So we were advising like Gramercy, LCN, WP Carey on primarily sale and leasebacks across Europe. And then I got approached by an old colleague who was working at GVA, said, we need help growing the European capital markets side. Would you be interested? And it was an opportunity to go back and work with him again, because we'd worked at King Sturge and Jones Lang and he'd moved there. And so I then took on this role at GVA, now at Avison Young.
So what is a net lease transaction? There might have been people who listen to this podcast and have listened to it for a while who would have heard the episode that I did with Carolis at WP Carey and John Strang of Blackbrook.
Okay. Yeah.
So for those of you listening, if you want a kind of a deeper dive over and above what Penny's about to tell me, go and check out those episodes if you really want to.
Definitely, they're the pros, without a doubt. We're obviously helping source those type of opportunities. We have So within our business, if you're a big corporate, you usually have an occupier services side to the business. And also what helps is we have a great US business where sale and leasebacks are really common, really common. And it's an opportunity of financing for businesses and release equity within the business, in particular in difficult markets like now where interest rates and costs and everything have exploded for the business. So it's basically owner-occupiers, and they will agree a sale and leaseback. So it's usually a long-term lease, long-term triple net lease, which means there is the occupier has full responsibility of repairs and insurance of that property. So the actual net income is really what is on the paper, which is proposed. There's very little risk.
It's almost like a credit play.
It's exactly a credit play. Exactly.
Coupon for 25 years or whatever.
Yeah, exactly that.
And it gives the owner occupier an ability to have a cash event, sell their real estate, but still stay there.
So they've got security of the real estate, which is usually critical to their business, but they're releasing a huge amount of equity, which they can then invest back into the business. And also a majority of them are not real estate professionals. So for them to be an owner occupation of a big piece of real estate, which has a lot of equity tied up in it, it's a great opportunity for them to release that equity
it's not
and reuse
it. Part of their business.
No, not at all. And I think we're beginning to see that a lot again in these markets.
So you did that for a period, and then you joined an old colleague, to your point earlier about maintaining relationships and
really
friendships
important.
with people.
Yeah.
To go to GVA.
Mm-hmm.
And what was your role and remit at GVA then?
So I was asked to really help, first of all, grow the European capital markets, but actually then when Avison Young acquired GVA, I only came on as a consultant to start with, and then Avison Young asked me to be full-time to help grow the European business as well. So that's part of my role on the European Executive Board, is working out where we sourcing businesses which might be interested in joining us. Yeah, exactly.
And for people that don't know, Avison Young bought GVA, right?
Yeah,
shortly after you probably joined there.
So I think actually Avison Young have been one of the biggest, fastest growing advisory businesses from its initial concept. So we are Canadian HQ, and they started in I think it was the mid 1970s. So it sounds an old business, but actually in real estate terms, it's not that old a business. And we've got 5,000 people across the world. So from a very small Toronto office originally. And that's not going to stop. I think a lot of advisory business has been through having their own issues. We all have. We've had not just our clients are having issues, we're having our own with the interest rates and transaction volumes being literally nothing for the past 18 months. So we've been through a restructure and we've come out stronger, and we're back on the acquisition and the growth front again. So exciting, really.
So can you just tell me a little bit more about what your role and your remit is at Avison Young, what you're responsible for and what you do day in, day out?
Yeah, it's quite diverse. So I'm based in London. And to be honest, pre-COVID, I was probably traveling every other week minimum. But post-COVID, I'm probably once a month maybe, or perhaps twice a month pushing it, but once a month. So, and that's going out either to see clients or see my colleagues on the ground, meet potential businesses, people to recruit, but also seeking opportunities or advising, going to see a property and saying, you need to do a bit more work on it, or a bit more asset management. Now's not the time to sell it, or seeing an owner-occupier on the sale and leaseback, advising them. So as I said, it's very varied. It really is. So I've got a small team, two of my team based in London, but we work with, Dan, my main guy, associate, he spends half his time in the logistics UK Capital Markets team, but then he's with me, and so he helps that link also between our teams in Europe working on industrial and logistics deals with the UK, because as we know, majority of investors are cross-border now.
And a lot of them are based in London or based out or HQ'd out of London.
Exactly
They'll allocate capital across Europe.
Exactly. So it's a majority of the decision makers are here as well. So it's important that you are near those decision makers as well, whether they're thinking about buying or selling. And that's part of my role too.
And do you divide the team by asset class or by geography, or how do you kind of segment it?
I think it's more, we're quite small, so we're not quite big enough to be sector specific. We're going in that direction, definitely. But at the moment we are more regional basically.
And it's obviously, you touched on, it's been a challenging 18 months, couple of years post Trustonomics. Have you seen, what capital is there, or where do you see the pinch points in terms of deployment, and what are the reasons why volumes are so low?
I think a majority of us who've been through the GFC or going back a few more years, some other recession, I think it just shocked everyone how quickly the market stopped, and with interest rates going as quickly as they did, and we're in a different position post GFC, because it's not as if there's no money in the market. The banks are well capitalized, investors have equity, and I think that's why also we're seeing a lot of people stop, wait, see where pricing is getting to. Banks are also, we thought there would be more distress, but we're not seeing that because the banks are willing to refinance. Investors are definitely preferring that opportunity rather than bringing something to the market in a difficult market when they're not going to get best pricing. So that's stopped a lot of opportunity coming to the market, but there's still some institutional funds who have to sell the open-ended funds, for example. And that's not just the UK ones, it's the German ones as well, and the French, etc. They've got redemptions. So open-ended funds, for anyone who's listening, you can have a closed-ended fund or an open-ended fund. A closed-ended fund, you are invested for a period of time, then that fund comes to the end of its life and then you exit from the property. Whereas an open-ended fund, you have the ability to put money in and put money out whenever you want to. There's no timeline on it. And so with real estate and pricing moving out so significantly, there's been quite a few redemptions. And I think 2023 was the year of transition for everybody with the interest rates and inflation and everything. This year's the year of repositioning. I think we're going to see a lot of funds exiting offices, reducing their exposure. So although we're not seeing it now, that will be first sector majority of the product coming from. We've seen some logistics being sold, but that's the most liquid asset class at the moment as well. So those who need to sell, unfortunately, have to sell those assets. But I think we're seeing a doubling up of logistics. So it's beds and sheds. We're always hearing that, and that's where the investor focus is, and that's from across every investor spectrum. But the core money isn't there at the moment in the market. They're still working out their position.
Hit their returns.
Yeah,
because core return is what, 6%, and when you're getting 5.5%,
between 6 to 8%. 6 to 8%. Yeah,
6 to 8, and you're getting 5.5% in the bank.
Yeah,
to allocate that to real estate with all the risks associated to it is quite a challenge for them
to
get their head around.
It is, but then that's where I see some opportunity as well. There's a bit of a price dislocation on those core assets, and in particular on the logistics, super prime or prime logistics, brand new. There's such a lack of supply still. Vacancy rates are so low. There's huge rental growth opportunity. And that's going to continue until building starts again. And if the core money is not there to buy the product, then there's an opportunity, less competition. So I think that to me, there's an opportunity to get some flight to prime product.
And just to square that off, you mean in terms of people being able to buy more value-add development or opportunistic type kit, work their way through the development of that, and then exit it to a...
Well, I think actually just standing existing investment at the moment. So let assets. So brand new, fully let, because you haven't got the core money there to buy it, because a developer doesn't want to sit on an asset which is completed. Basically, he's got other projects he needs the money for, so he will be looking to sell those, and they're slightly in distress because they need to
offload it.
Yeah,
he or her.
Yeah, I know. So, good point.
And is there a particular location where there's capital coming in from? Is it the US? Is it the Middle East? Is it the Far East? Is it Europe? Or how are you seeing
actually, it's across the board, really. We're seeing, US. We've seen French money coming in, and Middle Eastern is quite attractive to them at the moment, with the yields being higher. And there's still some Asian investors looking as well. We saw obviously in Old Bailey, there was an Asian investor under offer on that from Korean money, but going back to banks, then came and offered them a great term sheet for financing that. So they took it off market and thought, well, actually, we'll do that, put a little bit more money in, and we'll bring it to market in 2 to 3 years' time when the market will hopefully be better. So,
in your time, you would have worked on the other side of the fence, hired. What are the kind of the traits that separate top performing investment agents to the rest?
I think I like somebody to be entrepreneurial, think outside the box. I know it's easy to say, but and be passionate. I think you got to want it, I think. And it's a good question to try and pinpoint the exact traits, but you can usually tell from across the table whether somebody's got a passion for it, and their ideas and their willingness to do something out of the ordinary, really.
Engineer a deal or match capital with deals. Or...
It's really, really understanding your client is obviously critical, because if you don't understand your client, you can't help them. You can't source that opportunity or best advise them about when to sell their property, etc. So client management is critical. And if somebody across the table saying, well, I'd say, well, who can you bring? Who you can bring? Which clients can you bring to the team? And if they can't really reel off a numbers of clients, then I'd be concerned, because how really close and how much they really understand that client for them to be able to bring them. Well, they come with them, basically.
Hence your point around trust, relationships.
It's critical. Networking as well. They have to have a strong network, because, as I said, it's very different from being client side, where you are much more specific in your role. When you're advisory, you have to have a lot of things going on, to be honest, because if you're buy side in particular, it's not deal certainty. So you need to make sure that you've got lots of potential business on to make one of them
drop.
Yeah.
So you work on 10 things for 2 of them to come off.
Yeah.
Is that kind
hopefully.
of hopefully is that kind of a bit more of a numbers?
It is.
A numbers type game.
Yeah.
Have you? And this is probably quite an obvious question. Have you seen a big shift in terms of the way that the buyers and sellers underwrite deals from a technical perspective? And what has that evolution been? Has it been back of a fag packet, quick fire numbers to like overly engineered and really sophisticated financial models, or?
Yeah, I think the GFC brought in a much more professional approach to underwriting, and we really needed that as a business, as a profession as well, because we had a lot of investment bankers coming in and looking at real estate for that hadn't done so much before because of the low interest environment. Don't forget, also I'm jumping around a bit, but we're coming out of an abnormal period back into a normal period of interest rate environment. But that's why real estate was so attractive, because debt was so cheap. But we as a surveying profession, yes, we had to match those investment bankers and how they approach their analysis of an opportunity and structuring and everything. So cash flows, if there's anybody wishing to go into capital markets, whether it's client or advisory side, go do a cash flow course. Learn how to do an Excel spreadsheet. It is critical. Modelling. So
upskill, learn, develop your technical skills, and make you a better agent. Can we talk about female representation in capital markets? Because it's woeful, right?
Yeah, I'd say it's a very difficult topic to talk about, actually. It is. I can't quite. I have my own, obviously have my own view, but it is really disappointing how slow the change is happening within the advisory side of our business and women coming to capital markets. The big change I have seen is on my client side. Quite often I am opposite an amazing female, but it's not the same. And even clients complain to me there's not enough female representatives on transactions, and we have to change it. We have to. And if I can do anything to help in that happening, I'm here to do it, because it's so disappointing.
And is that, in terms of the female representation on the client side, are you seeing that from junior analysts all the way through to very senior executive owners? You're seeing that across the board, aren't you?
Yeah. I mean, I think don't get me wrong, there's still a lot that side too that needs to happen, but it's
still not perfect.
Yes,
but
exactly.
It's further ahead.
Yes, without a doubt.
And why do you think that is from an investment agency perspective?
I've got to think about my answer. I think it's very much a culture perspective. I think I've been doing it for a long time, so I'm used to the culture in which you have to work in. It's very competitive. As I say, it's a tough environment. It's and in a competitive environment, you're going to get different personalities, and it's learning how just to manage those personalities. And once you do that, you'll fly. I know it sounds simple, but and you're always, whichever area you work in, you're always going to get somebody who might be more difficult to work with. But if you want to do capital markets, give it a go. Don't let just one thing put you off. Really give it a go, because it is well worth it. It really is. But I think it does go back to culture within a team, within a business. And that's where it needs to change.
And is that because you can be flexible if you need to be flexible? Like there is no need to be on 24/7.
Not so much.
Right?
I mean, historically there was this perception. Don't get me wrong. We had to be on, and when I came back from having my second child, I had to negotiate how often I was able to work and or where I was able to work. It wasn't because there was still this perception, you can't work less than 4 days in capital markets. It just doesn't work. Well, it does, and it can. If you can be given that flexibility then I'm sure you will make it work. It's just having the option of that flexibility. And I think it has changed post-COVID as well. That has been a big game changer, I would say, in flexibility, people coming to the office. And so it's helped a lot, but it still needs further help and assistance.
What can we as an industry do to help promote that, reduce barriers, blockages, open up female talent to be able to progress within capital markets and progress as far as they want? How and what can kind of people listening to this practically do?
So from a client perspective, I think if you're asking for somebody to pitch for a sales mandate, I think when you look at the team sitting opposite you, is it the same as your team? Does it reflect your beliefs, your how you see a balanced team? You're going to get best advice. And I think when they start questioning that, then and saying, well, you're not going to get this mandate because you're not a balanced team, and I don't want a female colleague just to be put on that team to provide some balance, but then actually not be part of that team. That is the other thing. So it's really difficult.
It's challenging, right? But
it's really difficult
because there's the other argument, which is best person for the role.
Exactly
right?
that.
And
exactly.
so you don't want to be bringing people into situations because of tokenism or because of representation.
Yeah.
But it's almost like trying to get in earlier, and whether it's identifying strengths or giving people the platform to excel.
Yeah, I think it is that. I think you need I think we need more leaders to say, right, come with me and just bring them through. I think that's I was very fortunate in my career. I had those amazing male leaders who thankfully saw something in me that they wanted to nurture and encourage. And we need more of that, really. And there are lots in our business who do that. There are some amazing male colleagues who do that, but we need more. We need them, in particular transactions, to help nurture. They have the daughters as well. So think of it as bringing your daughter up through is another way.
And there's a number of different groups from, I think it's Ella Johnson and Alexa Baden-Powell have got Women in Real Estate Win, and there's Ladies in Real Estate that Adina
They're
runs,
amazing.
and there's Wire that Audrey Klein kind of spearheads. So there's lots of platforms or networking.
Join
groups.
them all. Join them all. They're phenomenal, and it's great networking. A lot of them do really good training as well. Like Diversity Talks Real Estate, Women Talk Real Estate. They're phenomenal. And they do panel training. They do presentation training outside of your business. So please, I strongly recommend anyone wanting that kind of experience to join all those platforms.
There's a CPD play there and networking.
Exactly.
And upskilling. To give
very
yourself
much
confidence to do it. It's obviously been a challenging 18 months, 2 years, 12 months, as it were. Mm-hmm. It feels like, and certainly some of the commentary coming out of MIPIM recently, it feels like, I don't know, with Thursday night, we're kind of turning the corner. We don't want to talk too soon. Yeah. But is there talk of a bit of a recovery on the horizon? And if so, which European markets are going first and who's behind?
So I think most people think we're at the bottom of the market. I think so. If you were at Expo last year, it was pretty hideous, and everyone was wondering, oh my God, when's the market going to improve? I think a lot of us went there with positivity, but actually came back pretty negative. But I think that was probably because the German market's really been suffering more perhaps than most.
Yeah, head in the sand. A lot in Germany, right? Extend and pretend.
But they have it's very different structure in Germany, how they value and approach it. But I do think that we will see more liquidity and more opportunity there, because post-GFC, pre-GFC, it would have been sort of 80% domestic money, 20% cross-border money, so international money investing in Germany. Post-GFC, I would say it's probably 50-55% domestic. So there's much more of a balance there. So you've got international investors looking at their markets at much more umbrella level, and therefore making it more liquid, and looking at rebalancing their portfolios on a global level rather than just on a individual country basis. So, but going back to where we see the quicker recovering markets is obviously the UK, because it is the most transparent and liquid market still, I would say, in the world. So we're beginning to see grassroots coming through. I think the London market, the volumes are up again Q4 2022, and we've seen some more transactions again this first quarter. So that's giving people some confidence. And I think the second half of this year, we're really going to see some more deals come through as people are more confident about where the market is. Also, the potential interest rate cuts. We as a house think that will happen in June. So, and I think we all are saying we need that to happen to help. And then moving across to Europe, the Netherlands is really, really transparent market. It's very international as well. So, but the issue they have there is stamp duty, which is 10.4%. And that's on both buying shares and direct real estate. So that is really having an issue now on that market. That was brought in the 1st of January last year. So really great timing from going for 8%, another 2.5%. France, so Paris is its own market, but that is still performing pretty well. And sector specific, I think a lot of focus will be on industrial logistics in the French market and the German market, actually really across the whole sector, because there's very little supply coming to the market. Therefore, expect rental growth, and then we don't expect that the new supply to change quickly because of interest rates and inflation woes, etc. So that even there's demand for that. It's whether it will actually come to fruition. The opportunities will come, but it's always a wave. So we always used to say that the continent was 6 to 9 months behind the UK. So if the UK is going to be beginning to see some recovery second half of this year, I would expect end of 2020, first half 2025, we'll see a lot more on the continent coming through as well.
It's a herd mentality, isn't it?
It is a herd mentality.
This real estate world that we're in. So
yeah.
Maybe a few of the big players.
It's where liquidity is, though. It's the most liquid markets, and as I said, the UK is still the most liquid. I mean, I did a big deal in the city. It took me a week to buy a £280 million building a week.
Wow! So
that's how quick you can do a deal in the UK.
Whereas in other markets, it can take a hell of a lot longer.
Exactly, because we're such a professional real estate market in comparison. So that goes down to the land registry, etc.
Touch on logistics, regional offices. Does living come in?
Oh,
or
yeah,
lending as well?
Yeah. So regional offices, I think if you're brave, great opportunity. If in particular, if they're prime, grade A assets, again, in the future, it's going to be such a limited supply. And it goes back to sustainability and ESG requirements, not just of investors, but occupiers. They will be flying to quality. And if there's not the supply of grade A buildings in a Birmingham or a Manchester or a Glasgow or an Edinburgh, and you've got the one building which meets those requirements, brilliant. Huge rental growth.
Fight to quality, hospitality-led amenities.
Exactly.
There's a big angle there.
Yeah. But, I mean, it's a tick box. You know, we say that occupiers need to provide the best environment to retain talent, etc. And investors have got to have those types of building that, meet all their sustainability requirements, because they're under pressure from their own investors, who are then under pressure from their own investors that they meet those requirements. And that's not going to change. It's still at the forefront for a lot of owners and occupiers.
And so there's a massive opportunity with that wave coming through as well.
Yeah. So, but that's where the value add opportunity is as well, is to bring those brown to green
opportunities back in. Well, look, Penny, you've had a phenomenal career. You've bucked the trend time and time again. To do a £250 million deal in a week is not down to just
good teamwork.
A good teamwork, but also
teamwork makes the dream work.
A lot of experience and credibility and trust from all those relationships that you've built up, and respect over the time you've been doing this. But a question that I ask everyone who comes on the podcast, as a closing tradition, as it were, is if I gave you £500 million worth of capital, who are the people, what property, and which place right now would you be allocating that?
I'm sitting on two fences, actually. I'm sitting on, personally, if it was just my 500 mil.
Penny hacking family office cap on.
I would be selfishly going back to my farm roots.
Okay.
Because we are concentrating so much on energy security. We are not concentrating enough on our food security. And I would be buying up prime agricultural land and saving it from being made into housing, to be honest, because I think cities should be going up, they shouldn't be going out. And we are going to reduce our food security by removing all that agricultural land. And it's criminal, in my view.
So rewilding, is that in, or
not
is
just
that...
No. Well, yes and no. If it depends what type of land it is. Prime agricultural land should be used for agricultural, producing food. So, but if it is scrubland, then yes, use it for rewilding, definitely, with some sheep and cattle grazing on it.
So that's the penny hacking family office, 500 million of capital to be deployed in farming. And if you were thinking more with a commercial mind, where and how are you going to be allocating that?
I would be going down the value add route and sourcing multi-let industrial, older industrial logistic assets, which can be repositioned and brought back to the market where there's limited supply. So in particular in certain markets in Germany, and the big five markets, but in particular like Berlin and Frankfurt, where there's very little supply coming to the market, huge rental growth opportunities there, but growing the portfolio on a pan-European basis as well.
And are there any people that you've worked with in your career that you bring along the journey to help you with that capital deployment?
Quite a few, actually.
I'm sure quite a few ladies as well.
Definitely. I bring Madeline Cosgrave back. She's exceptional. And being head of Europe, she knows the markets and
trusted advisor to help you with that.
Trusted advisor, know how to work with her, and I'd love to set up an all-female team. I really would. So
watch this space.
One day.
Give me a call. Actually, you probably want a female representing you on that. But maybe I'll be the diverse. I'll be the diverse piece in the team, and I'll probably get to feel what it's like with what you felt like most of your career. So, but look, Penny, like I said, phenomenal career. You are so well connected and trusted by so many industry leaders in our space. And I've loved unpicking your career and chatting shop about the market. And I'm really excited to see what you and the team go on to do through 2024 and 25 and beyond. Brilliant.
It's been actually a pleasure. I was dreading it, but it's been a pleasure.
It's a first for everything.
I know, definitely. Thank you.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.